Hello everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predict gold prices. So in the last video I said that gold would go up. Well, it went up and now it's down again. So let's see what's happening. Let's watch the Gold Forecaster Index. We got a new data point, and as you know, this Gold Forecaster Index is based on leading indicators for the gold price. So maybe in 2 months from now, we will see much higher gold prices. And the latest data point is pointing massively up. So I think gold will go higher from here in 2 months from now. So just buy more. Here, the Taylor rule rate is rising. So it was at 9%, now it's at almost 11%. So that means the Fed needs to raise interest rates to about 11% to tame inflation. Where are we now? At 0.25%. Okay. Powell is going to raise rates today, and we'll see how much. But it should have been already at 10% now. So we are going to see much more inflation going forward, and that's good for gold. Same here, unemployment is still rising, inflation is rising, so that's all good for gold. We also had some very bad ADP numbers today. So yeah, it's looking very good for gold. This is still old data. I think Peru had very bad production numbers. Yeah. So here you can see production is not rising, so that's also good for gold. These were still old numbers, but you can see that there is some interest in the ETFs from institutionals. China gold demand has been lower in February. Still waiting for the March numbers, but yeah, it's a bit down, but I think it will rise again. PSLV premiums were down, so yeah, looks like there's not a lot of interest in silver these days. US Mint sales were also down, so for gold it's better, but for silver it's not rising anymore. So I would stay in gold instead of silver. Premiums are still high, so that's still a good sign. Maybe there is a bottom. But yeah, PSLV premiums were negative. Okay, COT report. We see some improvement. This is improvement, but I would like to see this go back here. And then we should have a bottom. So wait a few more weeks to see where this COT report goes, and then you can bottom fish. Interest rates rising, that's not that good for gold. And lease rates were positive, but I think they went down again today. This is not good. Swiss franc is crashing. So yeah, you have positive things on gold, but also negative things. For example, the tips rate is also crashing. So that means that we are now almost at positive real yields. So that is not good for gold. But perhaps inflation is higher than they report, of course. Okay, so this is still okay. Real yields are negative. We are now in May. So there's still 2 months of bottom fishing to come. And then probably in July, we have a real bottom in gold. Same here for silver. Silver is not going to do well for these 2 months. It's going to go down. Yeah, we are now in April, going in May, and this is going to crash. So I would stay out of silver miners unless you want to lose money. The miner index is going down again, but we still need to wait for a bottom somewhere here. So we are halfway through. Wait some more until we have a real bottom. And then you can start buying. Let's go over the copper checklist as well. Copper was not doing that well. You can see that here. Real economic activity is crashing. Yeah, this one, you can see copper warehouse levels are rising, so that's bad for copper. No, China has a positive credit impulse, so hopefully they will reopen. And we see some signs that we are nearing a bottom, but yeah, not sure yet. So watch the Shanghai Stock Exchange. GDP forecast is still positive at 1%. So there is hope. Here as well, there is hope for copper. Seasonality is also negative. So wait 2 months and then you can get back in. China imports are falling. So yeah, it's not looking that great. Shipping rates were stable. This is interesting. Yardeni forecasts that we are at the bottom. So we are now here at the bottom and we should be going higher by 20%. So this is interesting. Inflation is rising on all aspects here, and break-even inflation is a bit lower than usual. And economic activity is slowing down. That should be good for gold. Okay. Now let's take a look at the banks. How is lending going? Lending is going surprisingly well. So loans and leases are rising. So I think that the banks might be doing well in the lending environment. But the problem is that they also have a lot of collateral that is falling. So stocks are falling and bonds are falling. So that's why banks are not doing that well. But this is a good sign. Loans are coming back. Money supply is still rising, so we are still in inflation. No problem there. Central banks are tapering now. So the Eurozone is actually tapering a lot together with Japan, and now USA will also start tapering. So obviously this is not good for the stock market. You can also see this here. All this tapering is also not good for the real estate market. And here we see that the reserves are dropping. Yeah, that's a huge drop. And it's going into cash at the treasury. So Yellen has now a lot of cash. It's around 900, it's almost 1 trillion in cash. That's a lot. And it's coming from the reserves. This is a bit of a problem. So the 3-month commercial paper minus Fed funds rate is spiking. That's usually not a good sign. I haven't seen this yet. So something is going on here. See, here we also have a recession. Now this is starting to spike. So this needs to be monitored. It could be that we are seeing the start of a recession. So there are lending problems. This was a nice chart. Disposable income is crashing. And this is correlated to the housing prices. If you have no income, you are not going to buy houses. And there's a Yardeni chart about the affordability index. It's also crashing. Okay, we are now in May, so this is probably going to crash even more. And that is a sign that real estate is crashing because there is no disposable income. So I would stay out of the real estate market right now until affordability goes back down. I mean, the chart goes back down. Okay, so these are the trade balance numbers. This is abysmal. It keeps on dropping. Look at this. This is just a disaster. Look at this. It is crashing. So this is for March. Goods are crashing, and also services are stable. Still in a surplus, but goods are really crashing. My goodness, this is really bad. This is not good for the dollar. And the gap is maybe smaller here, but it's in a rising trend, so there's inflation. Massive inflation. So if I were you, I would start preparing for a massive inflationary wave. You can already see it coming. Okay, so Powell is going to raise rates. Let's see how much that he needs to raise it. Needs to go to 3% at least. So Powell could add 50 basis points to here, or even add it to 1%, to 1% even. I wouldn't be surprised if he would hike until 1%. Yeah, so we're already at this level, so he should already be at 2% now, and not at 0.25. Yeah, it would not surprise me. Should already be at 1%. Okay, that's interesting. Let's see if I'm right. We already saw the inflation numbers. Capacity utilization, let's see. It's rising. So inflation is not going away. It's going to keep rising. So each time when we get to the 80% capacity utilization, you will see a spike in the CPI. Okay, so this is the top, and then the red line follows that. Same here, red line spikes up. Same here, red line spikes up. So capacity utilization keeps on rising. We are going to see a delay in the CPI rising, and that's good for gold. Food prices. You need to prepare for higher food prices because this is a correlation between food and ammonia. And this is a data point from today. Ammonia is at 1,500, so we should have food prices at 200. So that's a 30% increase. So prepare for that. Buy Verde Agritech and fertilizer. As you can see here as well, CPI. So the core CPI is without food and energy. And this is with food and energy. And you can see here that food and energy is really rising. So you need to be in food and energy. Verde Agritech is food and energy. Okay. Perfect hedge against inflation. Credit impulse is rising, so that could boost the commodity sectors later this year. This is also interesting. We have foreigners who are now selling US treasuries. And that's also why the 10-year yield has been rising. So this has been going down. And apparently it's Japan who is selling the US treasuries. So watch Japan and see if they are continuing their selling. Here you can see some of the assets, and we are now at high inflation and rising. So blue line is the things that are going up, and that's oil, gold, gold miners. And look at here, the US real estate is actually going down. So if we have rising inflation, real estate is actually not doing that well. And we have evidence of that right now. You see the real estate crashing. So it all works here. All these correlations work. Also, we got news that the EU is going to ban crude oil from Russia and also ban fertilizers from Belarus. So a lot of banning and embargoes, and that will always push prices higher. So EU imports from these here, and Russia is one of the largest countries that they will import from. That's 26.9%. For coal, it's almost 50%, and natural gas, we have 40%. So that's a lot of banning, and they will need to get all that energy from somewhere else, like from Saudi Arabia, Iran, Kuwait, some potash from Canada. So you are going to see a lot of price increases. LNG from USA. And then one last chart to end it. You can see here that potash is rising and Brazil is on top of this. So if you want to have the best margins, invest in Brazil because they have high potash prices and the fuel costs are the same for all the countries here. So yeah, just buy Verde Agritech and you will be protected against inflation. And as for gold, maybe wait a few months and then you can try to bottom fish because I think the bottom is almost in and we should go higher somewhere in July. And I'll see you in the next video.